Hello and welcome to the video. I've had my eye on a very near penny stock for a little while now, and with the recent budget that apparently wasn't a budget, I think I may be tempted to buy. If you're new here, then hi. I mainly make videos around finance and try and find ways to help people with their money. So if that's something you want to see, then don't forget to leave a like and subscribe for future content. Taylor Wimpey, ticker name TW, have been hovering around the £1.5 mark now for the last month, and over the last year have lost just over 40% of their value. As if all seen with the doom and gloom this year, it's hardly surprising. Taylor Wimpey are a company that build houses, and this sector has been hit pretty hard over the last year, with material costs increasing due to rising inflation. If we look at the competition, all the major players are down similar amounts over the last year. Taylor Wimpey sit roughly in the middle at around 40%. Moving forward though, I would think a lot of the bleak economic future outlook is already factored into the share price, so I'm hoping the share price has already absorbed a lot of the uncertainty. The sector has also been facing some pretty strong headwinds from the possibility of a housing market crash. If that were to happen, then that would have a pretty big impact on the company's profits, especially if inflation is rising at alarming rates, as they wouldn't be able to recoup the high costs of materials if they're having to sell houses for less money. Of course, a housing market crash has been talked about now for a long time. I've had friends that sold up on properties and got off the housing ladder to rent in the hope that the market would crash, so they could then pile in as a cash buyer on a much bigger property without taking the hit on the property they're selling. This strategy hasn't worked out well and won't unless there's one almighty crash, due to the money they've lost paying extortionate rent. And then on top of that, the housing market has seen a crazy surge in the last year as well. Going back to Taylor Wimpey, if we take a look at the company's finances, they've actually been performing pretty well. They've had a consistent operational profit of $424 million for 2 years running. The net cash is a little concerning, dropping from $837 million to $642 million, and is estimated to drop to around $600 million by the end of the year. But the company has opened 50 new development sites recently, and with a fast turnaround and a stable demand for housing, this isn't too alarming at the minute. Within the new budget, that wasn't a budget, was a plan to sell more surplus land, and it was also announced that the planning system would be sped up. These are two bits of news that should favour the likes of Taylor Wimpey. The company also has a very attractive dividend yield, currently just above 8%, although of course there's no guarantee that this won't be cut or suspended in the future. If you look at their dividend history, they have paid a healthy dividend out for some time now, and that is more than likely where a lot of their drop in earnings has occurred. They are a well-established company, and I would be surprised if they put pleasing the shareholders with dividends before the financial security of the company. But unfortunately we have seen this with some companies lately, so it is something to consider. Stamp duty has also been slashed, which will massively favour house sellers. The message from the government very much seems to be they want to tempt people into those big purchases to keep the economy moving, if you excuse the pun. There are mixed opinions when it comes to Taylor Wimpey, with some analysts rating the shares as a buy, others as a hold. The general consensus though is a moderate buy rating. These ratings were made before the not budget though, just for context. Now on to the bad sides. Of course, with the current economic climate, investing in a company that will be directly affected by inflation and rising costs is not without risk. The government's financial plans have not been without criticism. We still haven't really been told who will be paying for this additional borrowing and how the money will be made up from the tax cuts. Housing prices are very much driven by supply and demand, and with mortgage lenders still quite strict when it comes to lending requirements, and with more families struggling with the cost of living crisis, this may affect how many people will be in a position to buy Taylor Wimpey homes. As always, let me know down below if you're taking a punt on Taylor Wimpey or one of its competitors, or if there's anything else you have your eye on at the minute. That's it for today though. Don't forget to leave a like and subscribe for future content. Stay safe out there. Peace.